Okay. Section 6.
Good morning, Warren and Greg, Ajit. Thank you so much for hosting this event. Good to be here. My name is Dashboy Undidger, and I'm from great country of Mongolia. A little bit background about my country. Mongolia is an emerging market and landlocked country sandwiched between Russia and China. But we are rich in history and minerals and have full democracy and growing economy. Last week, we hosted our second annual Mongolia Investor Conference in New York to attract investors like yourself. I know you meet and give advice informally to government leaders such as South Korea, China, and India. What advice would you give to government business leaders of emerging markets like Mongolia to attract institutional investors like yourself? It'd be great if you have long-term plans for exposure to emerging markets as a hedge or an opportunistic investment. Lastly, I welcome all of you to Mongolia, and my country folks would be very happy if you can make it to our economic forum this July.
Oh, thank you. Yeah. I have trouble planning a trip to Council Bluffs, which is just a few miles from here, but it takes an optimist. Actually, I met a fellow here at the annual meeting, probably 20 years ago or more, who did a lot in Mongolia. And he did very well in Mongolia and actually moved there for quite a while. I would say that if you're looking for advice to give the government over there, it's to develop a reputation for having a solid currency over time. I mean, that we don't really want to go into any country where we think that there's a chance, a significant probability of runaway inflation. It's too hard to figure. Other people have figured out ways to make money in hyperinflationary situations, but that's not our game, and I don't think I'd play it well. So we wouldn't be. That would be a factor with us. The chances are, and we won't find anything in Mongolia that fits our size requirements aside from that. But like I say, I think my friend that I met here 20 years ago has done very well in Mongolia. And if the country develops a reputation for being business friendly and currency conscious, I think that bodes very well for the residents of that country, particularly if it has some other natural assets that it can build around. I don't know that much about the minerals there or anything of the sort, but who would have bet on the United States in 1790? But we didn't have to have perfection. We just had to be better than the other guy for quite a while. And we started out with nothing, and we ended up with close to 25% of the world's GDP and faster growth rates and generally sounder currencies and all kinds of things. So I wish you well. Okay, Becky?
This question's from Peter Shen in New Jersey. It's for Mr. Buffett and Mr. Jain. In recent years, large private equity firms like Blackstone, Apollo, and KKR have aggressively expanded into insurance, raising permanent capital, managing float, and aiming to replicate the model that Berkshire pioneered decades ago. Given that these firms are now directly competing for insurance assets, often using higher leverage and more aggressive investment strategies, how do you view their impact on Berkshire's insurance operations and underwriting discipline? Do you believe that the private equity model poses risks to policyholders in the broader financial system? And has this competition made it more challenging for Berkshire to find and price insurance opportunities safely and profitably today?
Ajit?
Okay. Yeah, part of the question is very easy. There's no question the private equity firms have come into the space, and we are no longer competitive in this space. We used to do a fair amount in this space, but in the last 3-4 years, I don't think we've done a single deal. Now, you ought to separate this whole segment in two separate segments. One is the property casualty end of the business and the life end of the business. The private equity firms that you mentioned are all very active in the life end of the business, not the property casualty end of the business. You are right in identifying the risks in these private equity firms are taking on, both in terms of leverage and in terms of credit risk. And while the economy is doing great and credit spreads are low, the private equity firms who've taken the assets from very conservative investments, and I wouldn't say high octane, but they've certainly invested these assets in situations where they get a lot more return on the investment. And as I said, as long as the economy is good and credit spreads are low, they will make money. They'll make a lot of money because of leverage. However, there is always the danger that at some point the regulators might get cranky and say, you know, you're taking too much risk on behalf of your policyholders, and that could end in tears. We do not like the risk reward that these situations offer, and therefore we put up the white flag and said, you know, we can't compete in this segment right now.
Yeah, I think there are people that want to copy Berkshire's model, but usually they don't want to copy it by also copying the model of the CEO having all of his money in the company forever. And I mean, they've got a different equation. They're interested in, and that's capitalism, but they have a whole different situation, and then they probably have a somewhat different fiduciary feeling about what they're doing, and sometimes it works and sometimes it doesn't work, and if it doesn't work, they go on to other things. And if what we do here at Berkshire doesn't work, I spend the end of my life regretting what I've created. So it's just a whole different personal equation, and there is no property casualty company that can basically replicate Berkshire. That wasn't the case at the start. I mean, at the start, we just had National Indemnity a few miles from here, and anybody could have duplicated what we had. But that was before a G. and the G came with us in 1986, and at that point, the other fellows should have given up.
Yeah.
Station 7, please.
Hi, my name is Marie. I'm from Melrose, Massachusetts. Thank you for the time today. As a young person interested in investing like myself, I would love to hear your insights, Mr. Buffett. What were some pivotal lessons you learned early in your career, and what advice do you have for young investors who are looking to develop their investment philosophy? Thank you.
Well, those are good questions. I wish I thought of them myself earlier in my life. Who you associate with is just enormously important, and don't expect that you'll make every decision right on that. I mean, but you are going to go into, you're going to have your life progress in the general direction of the people that you work with, that you admire, that become your friends. I mentioned a few fellows that have died in the last couple of years. Well, all of those people were people that if we were working together on something 1/10,000th the size of Berkshire, I mean, they'd be the kind of people you'd choose. They're people that make you want to be better than you are, and you want to hang out with people that are better than you are and that you feel are better than you are, because you're going to go in the direction of the people that you associate with, and that's something you learn, and of course you learn it late in life. It's hard to really appreciate how important some of those factors are until you get much older. But when you've got people around you like Tom Murphy and just name them, Sandy Gottesman, Walter Scott, you're just going to live a better life than you do if you just go out and look at somebody that's making a lot of money and decide you're going to try and copy him or something of the sort. So I'd try to be associated with smart people too, where I could learn a lot from them. And I would try to look for something that I would do if I didn't need the money. I mean, what you're really looking for in life is something where you've got a job that you'd hold if you didn't need the money. And I've had that. And Charlie had it for a very, very long time. In fact, all the fellows I named had it. And they also, every one of those ones I named, they always did more than their share. And they never sought more than their share of the credit. They just behaved as the way you'd like anybody you work with. And when you find them, you treasure them. And when you don't find them, you still keep doing whatever causes you to eat or enables you to eat. But you don't give up on looking around. And you'll find people do wonderful things for you. I mentioned earlier going down to Geico and knocking on the door when the door was locked. I mean, who knows what was behind that door? Like, went in, but in 10 minutes I found that I had a man that was going to be just wonderfully helpful to me. And of course, if somebody's going to be helpful to you, you want to try to figure out ways to be helpful to them. So you get a compounding of good intentions and good behavior. And unfortunately, you can get the reverse of that in life too. And with a lot of, I was lucky in having a good environment for living that kind of a life, and other people, have a whole different environmental situation. They have to overcome it. But don't feel guilty about your good luck if you've got, if you live in the United States, there are 8 billion people in the world, and there's 330 million in the United States. You've already won the game to a great degree, and then just keep making the most of it. But you don't want to associate with people or enterprises that ask you to do something or tell you to do something that you shouldn't be doing. And that's one of the problems. I mean, different professions select for different types of people. And it's interesting to me that in the investment business, so many people get out of it after they've made a pile of money. You really want something that you'll stick around for, whether you need the money. Greg doesn't need the money. Ajit doesn't need the money remotely, but they enjoy what they do, and they're so damn good at it. It's it just. Well, I've had the advantage of seeing how that works over time. The best manager I ever knew, and there's a lot of contention for who that would be, but actually was Tom Murphy Sr., who lived to be almost 98. And I've never seen anybody that could get the potential out of other people more than Murph could. I mean, if you wanted to become a better person, you wanted to work for Tom Murphy. And there are all kinds of successful people that really don't have that don't bring that to the party. And I'm not saying that's the only way to succeed, but I think it's the most pleasant way to succeed for sure. And I think that the Berkshire experience is pretty dramatic. I mean, to operate with Sandy Gottesman from 1963 until he died a couple years ago, Walter Scott for 30 years, and Greg operated with him for 25 years or so.
Right.
It was.
Yeah, 30.
Yeah, you really can't miss it. You'll learn all the time, but you'll not only learn how to be successful in business, you'll learn how to be successful at life. And so that's my recommendation. And for some reason, apparently you live longer too, because it's pretty amazing. I mean, these people I'm talking about, including myself, I like to attribute it to this and a few other things, but I think a happy person lives longer than somebody that's doing some things that they don't really admire that much in life. Okay. Let's move on to, I guess it's Becky next.
The first quarter ended March 31st, and it did show that Berkshire's cash pile expanded from the end of the last year. But the greatest market turmoil came in April. Martin Devine, a shareholder from Scotland who is attending the meeting today, wants to know, has the recent market volatility presented Berkshire with opportunities? And Martin just wrote in an addendum in the last 40 minutes or so, pointing out that you mentioned Berkshire almost invested $10 billion recently, and wanting to know if you could talk more about that.
Well, I can give you a good answer to the second part, which is no. But $10 billion wouldn't have done that much, That's the other side, another side of it. What has happened in the last 30, 45 days, 100 days, whatever you want to pick up, whatever this period has been, it's really nothing. There's been 3 times since we acquired Berkshire that Berkshire has gone down 50% in a fairly short period of time. 3 different times. Nothing was fundamentally wrong with the company at any time, but this is not a huge move. The Dow Jones average hit 381 in September of 1929. It got down to 42. So that's like going from 100 to 11. This has not been a dramatic bear market or anything of the sort. I mean, it was, pointed out, if I've had 250 trading days a day, for however many years I've been old enough to trade stocks, got 17 or 18,000 days. There's been plenty of periods that just are dramatically different than this. I mean, when the day I was born, the Dow Jones was at 240, and that was August 30th, 1930, and between that and the low, it went from 240 to 41. I mean, that's so. If people think that it made a really major change, it didn't. If it had gone up 15% instead of down 15%, people think they take that with remarkable grace. But if it makes a difference to you whether your stocks are down 15% or not, you need to get a somewhat different investment philosophy, because the world is not going to adapt to you. You're going to have to adapt to the world, and you will see a period certainly in the next 20 years, you'll see a period that will be in what somebody in the market described one time as a hair curler compared to anything you've seen before. I mean, it just happens periodically. The world makes big mistakes, and surprises happen in dramatic ways, and the more sophisticated the system gets, the more the surprises can be out of right field. That's part of the stock market, and that's what makes it a good place to focus your efforts if you've got the proper temperament for it, and a terrible place to get involved if you get frightened by markets that decline and get excited when stock markets go up. I don't mean to sound particularly critical. I mean, I know people have emotions, but you got to check them at the door when you invest. Okay. Station 8, please.
Good morning, Mr. Buffett, Mr. Greg, and Mr. Ajay. My name is Peter Chen. I'm from Shanghai, China. This is my first time attending this shareholders meeting. I would like to ask a question about the wisdom of life. Have you ever encountered any major setbacks or low points in your life? And how did you get through and overcome them? Thank you very much.
Well, everybody gets setbacks, and some people have particularly bad luck in that respect, and others get through with fairly minors. But Charlie, he had setbacks. I had setbacks. I mean, it's part of life, and they're not any fun. I don't have any great advice for you about having the time of your life while you're having some major setback. But it comes with lifetime. You certainly have a setback when you die. And so everybody's got that setback guaranteed to them. But some people get, and I mean, it isn't a laughing matter in a sense, because, I mean, people get extraordinary bad luck, and other people get extraordinary good luck. Usually the people who get good luck don't really think it was so much luck as themselves, but you're just going to have it. I think that you're less likely to have it in terms of medical problems, in terms of various things in life. I mean, you were born at a good time. I mean, if you look all the way through the history of China, when would you rather have been born? 100 years ago, 500 years ago, 1,000 years ago, or now? It's just hands down. You'd be lucky. I mean, if I came from 20 generations of shepherds, I think I get kind of tired of my life just looking at these sheep every day. But we can sit here and I can watch Nebraska not quite play the same game of football that we played 20 years ago, but I mean, everything in life has been made so much better that you've got to figure that you do a lucky straw by, staying in the womb for a couple 100,000 years and then just emerging at the right time. So I would focus on the things that have been good in your life rather than the bad things that happen, because bad things do happen. But it can often be a wonderful life. You could get terrible breaks in it. I mean, so far that really hasn't happened with me, but it's happened with some of my friends. But you get some bad breaks from time to time. But for 94 years, I've been able to drink whatever I want to drink, and they predict all kinds of terrible things for me, but it hasn't happened yet. So, and it's true. I mean, if you look at what pro football players are making now and everything compared to what they were making 30 or 40 years ago, you can say, well, isn't that wonderful? But if you look at the lifespan of professional athletes, after a while you get used to you really decide that you're better off if you really weren't the first one chosen to be on the baseball team or the basketball team or anything else. The human body, well, Charlie and I think I speak for the others to some extent, that we never really exercised that much or did anything. We were carefully preserving ourselves for the years. So, look at the bright side of things to the extent that you can, and you're lucky enough to you're here today. You're healthy. You come from a long distance, and you're getting a chance to learn more about something that interests you, and compare that with the situation a couple 100 years ago that you would have been offered. So anyway, that's enough moralizing. Okay, Becky?
This question comes from Himanshu Bandal for Ajit and Warren. Autonomous vehicles are already driving across roads in American cities with no driver involvement. How do Warren and Ajit think about any disruption risk from these autonomous vehicles to Geico's auto insurance business, which is built around understanding and underwriting human drivers? Wouldn't what we call auto insurance today just become product liability for autonomous vehicles and autonomous software companies?
Well, Ajit.
Yeah, there's no question that insurance for automobiles is going to change dramatically once self-driving cars become a reality. The big change that we will see is what you identified. Most of the insurance that is sold and bought revolves around operator errors and how often they happen, how severe they are, and therefore what premium we ought to charge. To the extent these new self-driving cars are more safe and are involved in fewer accidents, that insurance will be less required. Instead, it'll be substituted by, as you mentioned, product liability. So we at Geico and elsewhere are certainly trying to get ready for that switch, where we move from providing insurance for operator errors and be more ready to provide protection for product errors and omissions in the construction of these automobiles.
Yeah, we expect change in all our businesses, and good thing we did Charlie pushed me into it, but if I'd settled for being in New England textiles, and even though it worked well for 70 years or so prior there too, the world changes, and if the game didn't change at all, it really would be very interesting. It's if every time you swung at a baseball, you hit a home run, the game wouldn't be interesting. If every time you hit a golf ball, you had a hole in one, it wouldn't be interesting. The fact that there will be things you have to think about all the time as you go along, and you'll make mistakes and all that. That's really part of the fun. I mean, your brain would turn to mush if you didn't have a few problems now and then. So, auto insurance will change, although it's remarkable how little it has changed. But it's only been around since, for a relatively small time, and who knows what we're doing to move in transportation 100 years from now. If you go back a couple hundred years ago, who could have predicted the United States would look like what it does, and people would move like they do, and people would enjoy themselves like they do? And I mean, it's just it's a dynamic world, and the biggest thing we have to worry about, unfortunately, is that we've learned how to destroy the world too, and in recent years, and so we've got this wonderful world, which now we know that there are 8 countries that, and probably a 9th coming on, that can destroy, and we don't have what I would consider necessarily the perfect people leading each one of the 9, or some of the 9 countries. And when Einstein came up with E equals MC squared back in 1905, he didn't dream of the fact, that energy could really be converted, or mass could be converted into energy in a way that would change the world. When I was born in 1930, they had known about the law of physics that Einstein had come up with. 25 years earlier, nobody, to my knowledge, had thought, what can this do to change warfare in the future? And literally, it just wasn't thought. Einstein didn't think about it at that point. And then in 1939, Roosevelt got a letter around a month before Germany moved into Poland. It got around August 1st. It's the most famous letter in history from Leo Szilard. Leo Szilard couldn't get his letter in front of Roosevelt because whoever heard of Leo Szilard, but he got Einstein to sign it, and Roosevelt probably understood about as much about physics as I do, so he didn't understand it, but he understood that Einstein signed it. So he calls in General Grover, may not have been general then, and said, we should do something about this. And all we did was learn how to destroy the world, and we needed to do it. And Germany had Heisenberg, and he looked like he was ahead of us. And we can't put that genie back in the bottle. And the world does change, and we've got we've got wonderful things, but we also have, we have a guy in North Korea. If we criticize his haircut, even, who knows what he might decide to do with. What does North Korea need nuclear weapons for? I mean, can that be a good thing in the world? But they're not going to go away. So it's a world of change, And we are enjoying incredible change that's contributed to everybody in this room living so much better than people were living a couple of 100 years ago. But we haven't been able to avoid. We haven't changed human beings very much so far. We've certainly changed weapons of mass destruction, but we haven't made much progress with the human race, and we'll see what happens with that. But in the meantime, we'll see changes in auto insurance too, and cars, and that will be more. It'd be easier for us to deal with it than it was when we had to deal with the problems of turning out textiles in New England, and and you deal with the world as it develops. And like I say, everybody here is living in the luckiest period, but enjoy your luck, and you still try to figure out the answers to what's going to happen in auto insurance as we go along, and we've done pretty well actually adapting to the answers. There's a few big problems in insurance, and I don't know how the insurance industry adapts to them particularly, but that makes the game interesting. You really don't. You wouldn't want to go out and play golf if you know you're going to hit the ball in the hole on every hole.
I'd just like to add, we talked about the shift to product liability and to protection for accidents that take place because of an error in terms of how the product was designed or supplied. The only thing I want to add is, in addition to that shift, I think what we'll see is a major shift where the number of accidents that take place and need to be provided for will drop dramatically because of automatic driving. But on the other hand, the cost per repair, every time there's an accident, the cost of repairing and bringing everything back to where it used to be would go up very significantly because of the amount of technology that's going into the car. How those two variables interact with each other in terms of the total cost of providing the insurance, I think is still an open issue.
I'll give you two interesting figures to ponder. When I walked into Geico's offices in 1950, the average price of a policy was around $40 a year. It varies all over the lot depending on location and everything, but it's pretty easy to get up to $2,000, and depending on how urban your areas are and everything, you can get considerably higher. During that same time, the number of people killed in auto accidents have fallen from roughly 6 per 100 million miles driven to a little over 1. So the cars become incredibly safer, and it costs 50 times as much now, or thereabouts, to buy insurance policies. So when people talk about the developments in car driving and all that sort of thing, it's a lot easier sometimes. The Buck Rogers aspect of it, people look at, but they don't actually think of what really happens to the math of the business. The auto insurance industry has been a huge growth industry. And for that matter, homeowners insurance prices in Nebraska have doubled in the last 10 years, adjusted for general inflation. And convective storms, have just gone on a tear, and it's still unprofitable to write a homeowner's insurance in Nebraska after doubling the price in the last 10 years. So it's very hard to predict what these big changes mean. And you just have to keep thinking all the time. But you don't want to read some research report that says the world's coming to an end or the world's going to be wonderful because of this or that, because there's about 50 other developments going on at the same time that you need to think about, and that you need to keep observing as you go along. You never reach an answer in this business. You reach a point of action that you take, but we try to get into as high probability things as we think we can do and play the game in the same way. But it will be different than you think. and you should wake up every morning and think about that too if you're in the business of managing businesses.
Hey, Warren, as we approach the break, would you like to address the operating earnings?
Oh, yeah.
First quarter?
Yeah, let's put up the... we released our 10Q this morning, and we always try to do it on a Saturday so nobody gets a jump on other people. And we just have three simple charts. You'll see that our insurance underwriting income was down dramatically for the first quarter, and last year was as good a year as you'll see in insurance. And it's always unpredictable in insurance, but everything broke our way, or the insurance industry's way last year. Prices are down this year. Risks are up this year. So you don't have to be a genius to figure out what the answer is on that. So, but we do have unusual advantages in the insurance business that can't really be replicated by our competition. That doesn't mean they aren't trying to get advantages we don't have. But we'll try to replicate anything that seems better. In fact, we'll try and top it. But I wouldn't talk about our insurance business as much as I do it unless I really thought we had some really permanent advantages in a very, very large industry. We just announced within the last 24 hours that we in Zurich and Chubb have arranged a joint operation to be the writer of really large sums that very few people can do. And of course we got to write them at the right price in terms of liability, but we can do that sort of thing without blinking, and anybody that wants to do it wants to get us in it. I mean, so anyway, our investment income did not change that much because we have a float that grows a little bit, which gives us more money for investment, and then we have retained earnings, which grow. So we would expect in a year to have like $40 billion or more that will build up investments unless we find things to do with it. So the investment income rates on treasuries are less than they were, or short-term bills, I should say, are less than they were before. So you had that negative effect pulling it down, but not that much, and we had more money. So we came up with a little more in the way of earnings. The railroad is earning a little more than last year, but it's not earning what it should be earning at the present time, but that's solvable and is getting solved, and it's still an incredible asset for Berkshire. The energy company last year was having particular problems, and those are absent this year, so those earnings are up, and then among our range of general businesses, they were pretty much a push. And I think you did a little calculation the other day on how many were up and how many were down. Greg?
Yeah, of our 49 that we measure closely, 21 were up and 28 were down. So you can tell it was really a mixed quarter when you go across the non-insurance operating businesses.
Yeah. The next slide. I'm getting a 5-minute warning here. We'll throw the long ball now. shows our financial condition, which continues to hold a lot more in cash and treasury bills than I would like, but that's simply a question of when opportunities occur, and if you get real opportunities every 5 or 6 years, you have to be patient. Charlie always pointed out that we made most of our money out of about 8 or 9 ideas over 50 years, and we talked about it every day, and we read every report, and we did everything else. But if you think you can get an idea a day from listening to your Frederick Book or doing a lot of reading of the financial information published, or forget it, because every now and then you get extraordinary opportunities, and most of the time you don't have much of an edge. So we also have on that our float, which continues to build. I don't think there's no company that has property casualty company that has our float as their Jeep.
Yeah, clearly we are heads and shoulders above anyone else.
Yeah. So that is money that, as long as we're writing it at an underwriting profit, is absolutely free money. And we would expect that over a 50 or 100-year period that we would be able to say the same thing. But there will be years when you have a very bad underwriting record, and it'll lead into the float earnings. But so far in the last 20 years, I think we've only had one underwriting loss of any.
Yeah, I think if you look at the entire range, including life insurance, our cost of float is 2.2 negative. That means we've got the float plus somebody's given us 2.2% of that of cash to.
Yeah, it's like running a bank where people leave their money with you, and you pay a minus 2.2%, and you don't have any check clearing or anything else to do, and it's included in that. So, but we run our business actually with a different mindset than any other PC company, I think, probably in the world, and I wouldn't be talking about it if I thought they could duplicate it. And then the final page is on share repurchases, and clearly we have not made share repurchases so far this year, and share repurchases, if Berkshire buys Berkshire shares and repurchases, we now pay more than you will pay if you buy Berkshire shares. I don't think people generally know that, but there is a tax that was introduced a year or so ago where we pay 1%, and that not only hurts us because we pay more for it than you do. It's a better deal for you than for us. But it actually hurts some of our investee companies quite substantially. And Tim Cook has done a wonderful job. I mean, really wonderful job running Apple. But he spent $100 billion roughly in a year repurchasing shares, and there's a 1% charge attached to that now. So that's $1 billion a year that he pays when he buys Apple stock in, which we like, compared to what you pay. And that doesn't sound like much, but, well, $1 billion sounds like a lot still. But there are people that want to increase that particular rate dramatically, and you won't read about it or anything like that, but it does make it slightly less attractive than it was before, and we will only buy in our shares if we think that they're almost certainly underpriced, as valued very conservatively, we get that opportunity occasionally, but the higher that charge goes that the federal government charges us for doing it, the less we will be able to do repurchases. So on that happy note, we will rejoin at 1 o'clock, and we will, I'm sorry. Correct that to 11 o'clock, and then we will.
Yeah, 11 o'clock.
And then we'll continue to 1 o'clock, and then in the meantime, enjoy yourself, and I think all our stores are still open, so bring the cash register.
Sure, I'll help you here.
Yeah, okay.